in this video, let's talk about what happened in the stock market today. Well, a lot happened, and I think you need to understand that there will be times like this, and these times are the times that you actually want to buy. Remember, when it is red, that's when you want to find those opportunities and buy your favorite stocks, your favorite ETFs, because it will turn around again. It might take some time, it might take some few days, maybe months, but it will eventually turn around. And that's the mindset you have to have. Today, the Dow is down about 0.74%, the S&P is down about 0.37%, and the Nasdaq is down 0.03%. Now, what is going on? Well, a lot of things happened today. First, we do have some changes with inflation. The core PCE came out today, and as you know, that's one of those indications to the Feds if it is time to also consider cutting rates. And as we know, if inflation keeps going higher, the Feds are likely not going to cut rates. And honestly, that is really the main aspect of this. Then the second thing is, of course, the president isn't happy with the president of Federal Reserve. So there's a lot of tension going on with that. Now, the expectation is that the Feds are supposed to cut rates by September, at least, start cutting rates again. However, with this information that came out today, there is a chance that they may not. Now, remember, there's still a few data that still needs to come out between now and then, and that will determine if they should cut rates. But if inflation keeps going higher, based on what we are seeing now, there is a chance that the Feds may hold off on cutting rates. The next thing is, so come September, if they don't cut rates, the next expectation is that they probably will cut sometime in October. And the initial forecast was that they should cut twice this year, at least, towards the second half of the year. But that is probably down to once, unless something drastically changes. So the expectation now is they probably may not cut in September. They may have to cut rates sometime maybe in October or later in the year. Of course, this is all speculation. You don't know exactly what will happen because even the Fed does not know what to do. Now, in my opinion, I feel like, to be honest, I'm not an economist or an analyst, so I can't speak to the data and how much data they look at. But at the end of the day, there was something I read, and this analyst said, at the end of the day, you don't know when the perfect time is to make these cuts. The truth is that it's always a moving target. There will always be something new. There will always be a new policy. There will always be a new tariff. And it's okay to maybe start cutting now before it's too late, before things get really bad. But again, that was his own opinion, or our own opinion. I don't know if it's a he or she, but at the end of the day, we need to be prepared. We need to know what to do, especially like I mentioned in my video yesterday. If you're thinking of refinancing, buying a car, buying a house, things like that, you need to set your expectations and understand that this may take some time before we start seeing a decrease in rates. The next thing that I want to cover here is Microsoft earnings. No, not Microsoft, Amazon earnings. They actually just released their earnings, and it says here Amazon reported second quarter results after the bell that exceeded expectations. The company offered operating profit guidance that was lighter than Wall Street's forecast. So of course, the stock is slightly down. At the time of recording this video, it is down around 4.75%. In my opinion, Amazon is one of those that you probably want to buy and hold. So this may be an opportunity to dollar cost average and get into position for something great in the future. Now, the next one that is supposed to report in a few minutes, I guess, should be Apple. Now, I don't know what they would be reporting. The expectation is that they haven't been doing well, and maybe that would come through in their numbers. We'll see. But one thing that I want to share is Figma. The FIG is the ticker symbol. IPO today, and they were supposed to, I believe, IPO around $33 per share, but it jumped all the way to $117 per share when I first saw it anyway. And actually, when I first saw it, it was around $60 something, and then next thing I checked, it was at $112 and $117, and at some point they had to halt it. And that is just to show you how much there's I guess what we call the optimism in the market, where people are looking for the next big tech company. And to be honest with you, based on what I read about Fig, I actually went on to read their document that they shared with the SEC, And it is amazing how much we actually use their products without knowing. For example, Netflix, they work with Netflix already by designing their interfaces. They work with Google, they work with some other companies, so many big companies, all right? And they have been reporting great earnings. So I'm not surprised that their stock jumped. Let me see what it closed at this time. It actually closed at $121. Even after hours, it is up 4%. It is crazy. And that's one of the things that you should know about the stock market. In times like this, there's always a lot of opportunity, and this may be one that you may want to consider. Now, personally, I didn't buy any of this one because when it moves that quickly, I always try to stay back, because one of the things that I've realized in the stock market is that patience pays off. You can't always chase the hot stuff. If you chase the hot stuff every time, yes, you may get some wins, but in the long run, it would hurt you. In the long run. So it is best to actually play it safe, in my opinion. That is just me. I mean, tomorrow you can get to 150, and that's okay. It's part of the game. You learn. You don't have to play in every game, like I always say. One of the things that I also want to cover here is, if you are somebody who is looking to invest in the stock market, all right, all of this stuff may seem complicated or over your head, but one thing I will say is that it is very easy to get started. Now, in order to get that confidence to buy sometimes or buy into a company, it may take some time. And there's nothing wrong with taking your time in this process. One of the things I always say is that start with something that you understand. If you're going to buy the stock of a company, buy the stock of a company you truly understand and learn what impacts that company, whether it's the economy, whether it's the market, whether it's just investor sentiment about the company, right? All those factors will need to be learned in order to, for example, buy and sell. But if you are not in the if you don't have the mind to be buying and selling, or you don't have the time to learn some of these things, it is best that you just think about buying ETFs. I always say this every time. A lot of ETFs are down today. This is always an opportunity to get in. Now, it's not significantly down. Most of them are not significantly down, but it gives an opportunity to get in at a slightly lower price compared to where they've been recently, which is honestly is always a win. The stock market doesn't always go straight up. It's always, a step up, all right? So it's like taking a step each time, all right? Sometimes it goes down, it seems like it's going down, and eventually it recovers, and you just don't have to time it. Set your money to automatically invest on a regular basis. Don't think about it. Don't chase the market. You don't have to be monitoring the market at all. I do this because I enjoy it and it is fun for me. But at the same time, I do have some automatic investments that I do. All right. So that is something I want you to understand. I'm not a day trader. I try to just find opportunities when they present themselves and I buy. Okay. And then when they go up and I feel like, okay, you know what? This is at a price that I feel like I've made enough on it. I sell some of it, I hold some of it, I use that money that I make from the gains and I send it into maybe my diversified funds like the VT High, VOO, and SCHD and SCG, right? All of that is just what I do for fun. Okay, so that doesn't mean that I still don't dollar cost average on a regular basis. That doesn't mean that I don't buy index funds or mutual funds. I still do those things. That is automatically done. But there's also opportunity to play with some funds and let it grow as well. And sometimes you may do well if you, of course, manage your risk appropriately. And that is the key thing. Managing your risk is important. Don't chase the hot stuff. Sometimes the hot stuff will burn, okay? Especially on the long term. Of course, don't forget to drop a like on it. Don't forget to subscribe to the channel, and I'd love to see you tomorrow.